Hey everyone, this is Kevin the Apptrepreneur, and welcome to a brief little live stream about, Krispy Kreme going public again. Now, if you hear any clicks in the background, any beeps, any chair noises, it's because my wife works from home and she is still working. She has graciously decided to let me film in the living room so that we could, so I could basically have this nice little tripod thing and sit in a comfortable chair again. And because I don't think this one will take that much time, and I don't really want to spend a lot of time editing it. So before we begin, I do want to point out that, oh, hey, Roger, how you doing? This is not necessarily financial advice. I am not here to tell you whether you should or should not buy Krispy Kreme stock, which the ticker is DNUT, D-N-U-T, I believe. I'm not here to tell you whether to do that or not. However, interestingly, I have invested in Krispy Kreme stock before, and I got really burnt on it. And so I figured I would be in a better position than most to at least offer some insights on this. Although, whether you decide to invest in Krispy Kreme or another stock, if you haven't signed up for Robinhood or Webull yet, please use my referral links below. You will get a free stock to start with. In fact, if you sign up for Webull for a limited time, you will get 4 free stocks when you sign up. But anyway, so years ago when, I know Krispy Kreme's kind of been around for a while. Let me just, just a little. Krispy Kreme had been around for a while, but in the late 90s, early 2000s, Krispy Kreme was especially huge. Like, it was kind of like Starbucks is today. You almost couldn't go anywhere without seeing a Krispy Kreme there. They were just everywhere. And so Krispy Kreme was a publicly traded company, and when you started seeing Krispy Kreme basically being like McDonald's, where they would be on the street after the one you had just passed, you know, you're a young investor and you're thinking, well, golly, this company must be doing really well. So I'm going to buy some stocks, and I believe the stocks were $50-something back then. And keep in mind, I was walking dogs for a living, or I just started working at Target. I was new in my investing career. Hey, Steven, how you doing? And so I was just looking around me, seeing all these Krispy Kremes popping up, and I decided to invest in it. Now, the story did not have a happy ending, because the thing was, while Krispy Kreme was growing exponentially, one thing that they had not counted on was that they did not realize that they were overexerting themselves. This is something that sometimes food companies do. Subway is another good example of this. Subway is something that people do like to eat, but at one point there was just too many of them. And so when there's too many Subways, there's more supply than demand, and thus the stores make lesser and lesser money. So Subway's actually been trimming the fat too. They've closed several Subway stores. Like, I was surrounded by 8 Subway stores where I live. I think we're now down to 3, which is much more reasonable. But this happens sometimes, and this is what happened with Krispy Kreme. Even though I was looking around and seeing basically a Krispy Kreme pop up everywhere, I was not seeing that by having more Krispy Kremes, it was resulting in diminishing returns. And unfortunately, I had also happened to buy the stock when it was pretty much near the height of its popularity. And keep in mind, we didn't have Robinhood back then. We didn't have Webull. You had to actually buy through a stock broker. Mine was a good friend, Jim Shear, a family friend. They're still a good family friend. Disagree politically on some things, but, you know, still good people. So he would actually buy it for me, and he would take a cut. I actually think he took a very small cut from me, though, because he liked it when young kids actually invested. Unfortunately, this didn't work out very well, because shortly after you bought the stock, it started to go down. And it just kept going down, and then you start seeing the Krispy Kremes going away. And then you start finding out that it was basically because Krispy Kreme had opened so many stores, the business they were getting at each individual store was not enough to justify keeping the stores open. Therefore, they lost market share, they lost stockholder value, and then when the stock was down to just a few dollars a share, Krispy Kreme was bought by another company, and it was brought private. Hey, Lisa, welcome. So, interestingly, I had a pretty sharp stomach. This could very, very, very easily had turned me off from the stock market. I could have, because I lost probably $100 on it, which was a lot of money back then for me. And I could have said, I'm never doing that again. Thankfully, an uncle of mine who worked at Wall Street recommended that I buy some stocks from a new company called Google. And I also bought some stocks in Disney at the time, just because I like Disney, and those ended up doing very well in the long run. So that basically kept me in this whole investing thing. But now I find it interesting because now I'm seeing notifications that the company that bought Krispy Kreme would like to take it public again. In fact, they did take Krispy Kreme public again. It is selling under the ticker DNUT. Get it? DNUT? Anyway. And I think it opened at $16 a share, which is not unreasonable. That's not too bad. And it's actually kind of ending the day at $20 a share. So it actually seems to be doing very well so far. But now the question comes up, should you invest in Krispy Kreme? Should I reinvest in Krispy Kreme? I got burned by them once. Do I want to get burnt on them again? And again, this is not financial advice. I'm just sharing my experience. So here's the thing. Just because a company got so low in the stock price that they had to be bought out by another company and return to being private, it does not mean that they cannot mount a comeback on the stock market. In fact, Barnes & Noble, which I was also an investor on, and I did make out on that one, they were bought out by a private book company, and they were brought private again. And if the stores turn around and they can make them viable again, the company might bring Barnes & Noble public again. And I would probably buy Barnes & Noble again just because I do love the company. I do think there will always be a place for a physical bookstore, especially for people who might want to read a chapter or two before they commit to buying a book. And so that's one thing. But on the other hand, though, when you invest in a company and you basically lose your investment, it can make you very squeamish about jumping into that pile again. Now, what are Krispy Kreme's value propositions for going public again? I mean, after all, they went public once, did insanely well, and then almost nearly went bankrupt. Is there a reason to give them a second chance? And in this regard, I actually think there might be to a certain extent. I do believe that by paring down the stores and making it more focused, they have actually made their product desirable again. I think the trick is, here's the thing. It was like the Subway thing. They had more stores than there were demands. And we're talking about donuts here. We're not talking about anything else. Well, Krispy Kreme has expanded their menu to a certain extent. Not greatly, mind you, but they have now started experimenting with coffees. And coffee is very big right now. And in fact, coffee is so big that it even prompted Dunkin' Donuts to rename their company to simply Dunkin', where they are emphasizing the coffee. And Starbucks is a powerhouse now. People just love their lattes and their frappuccinos. So Krispy Kreme got into that. And the thing is, now that they are in that, donuts go great with coffee. And there's no denying that Krispy Kreme has some of the best donuts out there. I mean, their glazed donuts are wonderful. They're really wonderful. You can't eat them all the time. You really can't because they're high in calories, sugar, and carbs. But once in a while, I do enjoy a Krispy Kreme donut. What's more, Krispy Kreme kind of went on a very, very aggressive marketing campaign this year, and I think they were doing it because they knew they were going to go public again. One of the things that they offered is that if you get your COVID-19 vaccination and you show them your card, you can get a free Krispy Kreme glazed donut every day for a year. And we have done that several times. And in fact, if you were really aggressive about it, you can even do this with multiple locations. Granted, they're spaced out enough right now, so we can't do that. But this promotion did bring people back to Krispy Kreme. And once they go there, okay, well, let's try the coffee while we're at it, or let's buy a specialty donut. So Krispy Kreme donuts their sales have gone up quite a bit, in fact. So Krispy Kreme is actually in a very interesting position again. They're in a position where they never quite went away, and they are very small, but they are very loved, and they are in a position of growth again. Now, will they be able to temper that growth this time? Because right now, I think there are too few Krispy Kreme locations. So I think they could do more. But the question is, we've already seen this happen before. If they get too big, if they have too many stores, we could see a repeat happening on the stock. The stock could get severely undervalued once again. So what's my take? Would I personally invest in Krispy Kreme donuts again? And the answer is I probably would, but I would have tempered expectations. I would probably put no more than $100 on there. $100 at $20 a share. That's 5 shares, maybe 125 just to make it 6 shares even. But I wouldn't be buying a whole lot of it. And what I'm buying, I would be buying with the knowledge that it is very much a gamble. It is very much a gamble. And this is not something that I would feel too emotionally connected to. Like if it went to $30, I'd be putting my stop loss on right away because I have very realistic expectations of this company. So here's the thing. While I do think that there is a potential for growth there, and I believe that Krispy Kreme could have a comeback story, they've certainly been having a comeback story, I also would be hesitant to put too much money into it. This is, at least from my opinion, a stock that is speculative. It's a gamble. You buy it if it's fun. If you are hoping for a long-term investment and maybe that this could bring back 3 times what you put into it, I'm a lot more hesitant to say that I have confidence it will do that. I think basically I'd be buying it just because it's fun at this point, but not for any legitimate investing reasons. So I will probably put $100 into it tomorrow and get 4 or 5 stocks, whatever that is. And then I probably won't buy any more unless it just completely takes me by surprise and starts going crazy. But that's my thoughts on Krispy Kreme's new IPO. Now I pass the question to you. Is this a stock that you would be investing in? Is this a stock that you would want to own? Did you own it before? If you did, how do you feel about it now? And do not own or are not logged into a stock buying program. Again, sign up Robinhood Webull Portfolio. You can get free stocks using my referral link for all of them. And they're all pretty cool, although I will say Portfolio has a nice little added bonus where you can follow me and see what I'm investing in. It's basically Facebook for stock lovers. So anyway, that's where we are going to end this little live stream video. I would like to know what you think about all of this. Comment below, like, favorite, share, subscribe, and as always, flame responsibly. Have a good one.